At the time, there was not a single buyer of Bitcoin that was also on Bloomberg. Like that Venn diagram just didn't, intersect at all. But like inertia is also real. People that are used to doing certain things a certain way, habits are hard to break. And so like whatever the new product is has to be markedly better.
What's going on, everyone? Today I sat down with Michael Moro, who is the CEO of Genesis. For those who don't know, Genesis is one of the largest trading desks in the entire space, as well as one of the largest lenders. They just came out with their Q1 2021 report yesterday, and there were some mind-boggling numbers. One of them that we talked about near the end of the show, they did $31.5 billion in spot trading last quarter. 25% of that came from corporations. So that's $8 billion that corporations traded in crypto last quarter. They're part of the DCG family. So we talked about the early days of working with Barry Silbert and a whole number of other things that I think you guys will enjoy. If you like the episode, if you like this type of content, head over to Apple or Spotify or wherever you listen to your podcasts and give us a 5-star review. We're about 50% of the way to our goal of hitting 100 reviews. And that does a lot for us. And my friend at Apple said we can get on the homepage of iTunes if we hit 100 by June 1st. So shooting for that goal. All right, everyone, enjoy the episode. This episode is brought to you by LUKKA Tax and Exodus. Stay tuned for more info. All right, Michael, I am really excited to jump in here. Thanks for coming on the show.
Thank you for having me.
Of course. So I sent out a little note to several different investors saying I'm having Michael Moro on the show, Genesis Capital, Genesis Lending, Genesis Trading, excuse me. What do you want to know, right? And a lot of people were curious about are corporates buying Bitcoin, what's going on in the prime brokerage space. You have a new report that obviously just came out with some pretty staggering numbers. So we're going to talk about all that. But I want to start on a more personal note. I listened to every single podcast you've ever been on. Nobody asked you about where you grew up. And so I just wanted to get into your early life and the days before Citi and pre-Barry Silbert, not even in your 30s and 20s, but, where'd you grow up?
So I'm born in Tokyo, and I lived in Japan until I was 8 years old. I was about to turn 9, and then my father's business, which was in automobile parts, as kind of Japanese cars were getting really popular in the U.S. in the mid 80s. They wanted my father to start like a New York office. And so our family came over, my siblings, I have 2 siblings, I'm the oldest, and we landed of all places, in Staten Island, New York. My parents intentionally chose a neighborhood that had no Japanese people, never mind no Japanese, no Asian people. It was all Italians and Irish kind of families within the neighborhood, and I didn't speak a lick of English as an 8-year-old, so I was thrown to the wolves, so to speak, and said, "Hey, dumped in here, sink or swim." As far as kind of learning the language. And that was my first experience, the first 3 months of my life here. Terrified. No idea what was happening. The cartoons didn't make any sense. All of that stuff was a welcome to America moment for me.
Do you have any stories from your childhood that stand out to you as, a story that kind of shaped who you are today?
I was always really shy. I was an introvert. And things like this, public speaking, absolutely terrified me. And kind of getting in front of people. And I remember kind of taking classes, certainly in public speaking, speech classes in high school to kind of get people comfortable with doing things like this. And the funniest story that I can kind of think about, when I was applying for the high school, I got interviewed by the director of admissions of the high school, and the interviewer happened to also be the speech and debate coach at the high school. And he saw me after I started my freshman year and said, "Oh, welcome to school. Like, hey, you should try out for the speech and debate team." And I was like, "Oh my God, that sounds like the worst activity for me, personally to do." But like, I was raised Catholic, and there's like sense of guilt and like responsibility somehow that like I owe the guy. He got me into the school, and so you know what? He asked me to do it, so I'm going to try out and do this, and I'll bomb it. I'll be terrible at it, and then he'll just leave me alone for like the next 4 years, right? And so and then I did it, and somehow I made the team. I don't know why I made the team, and I was like, oh no, now I'm really stuck to like doing this. But like at the same time, I'm sure there was a little bit of like, hey, overcoming your fears, and this is good. You might need this later in life type of stuff. And so I chose to kind of stick with it, and naturally just kind of got better and more comfortable with it over time. But I think that conversation with that like interviewer had a huge impact on my life as far as being able to do this, and chat with Jason about, my career and my life and all of it. So that was a huge turning point for me.
So you go from this kind of this kid who doesn't know much English from Tokyo on Staten Island to, I listened to your talk at MicroStrategy, at the MicroStrategy conference for corporates. When you get approached to do something like that, do you still have a sense of nervousness? Like, is that something where you're like, oh my God, I need to dedicate a ton of time to prep, or does it come pretty naturally? Do you know?
I think it's a combination of both. I think certainly you approach it with the view that like you're the expert, right? That there's no one in the audience, I'm probably fooling myself in thinking this, that knows more about that topic than you are. And so that's one, as far as trying to kind of build the confidence to kind of go out there and just like speak generally. At the same time, you're still very like honored to have been invited and kind of given the stage and kind of the opportunity to talk in front of so many different people. And I approach even this podcast with you, Jason, like I don't take this stuff for granted. And every opportunity I get to, not talk about me, but talk about Genesis or talk about kind of the crypto industry and all of that is something I take incredibly, incredibly seriously. And some of that just kind of comes from knowing your business and really feeling like there isn't going to be a question that you really kind of can't answer. But at the same time, also appreciating the opportunity and the seat you've been given to do things like this. And so, as nervous as I can be from time to time, I do try and enjoy it too, because it's one of these things where it can disappear tomorrow. Yeah,
we're gonna jump into Genesis and all the questions around prime brokerage and all that kind of fun stuff. And you guys have a crazy business going on, and the numbers in this report were nuts. But I actually want to stick with Staten Island for a second. I'm just really curious about that part of your life. I know someone who grew up on Staten Island who said that there was a ton of, just during that period, a lot of racism and a lot of like bullying. And it was kind of like a hardo, intense place to grow up. Like, did you experience this as the only Japanese kid on the block?
If there was, I was oblivious to it. I actually consider myself to have been incredibly lucky to have had kind of the neighbors and the community that I grew up in. And frankly, even though I didn't speak any English, how I became friends with kind of the neighborhood was baseball. I was a huge like sports baseball fan growing up, and then you come to Staten Island, you don't know anybody, but you see kids, playing catch out on the street or trying to play stickball or something. And, the commonality in the rules of baseball, I didn't have to understand the language to know that strikes and balls and outs and all of that stuff. And I think through sports was really how I connected with a lot of the kids within the neighborhood. And it's also through how I learned English. It was, you learn little phrases kind of here and there, and, or you're like, oh, and you come in the house and Mom, what did that kid, he just said this, what does this mean? My parents spoke a little bit of English, which sort of made it easier. Then they'll translate for me in real time, and I run back out and kind of keep playing. So that was a huge part of the neighborhood and my upbringing. So if we had a lot of that kind of racism stuff, I didn't feel it. I consider myself incredibly fortunate, and I had a great childhood. Within the Staten Island community.
Nice. Yeah, and Tokyo has a big baseball community, so.
They do, and Japan's not, it's not a big country, but I think there's like 12 baseball teams, right? And a bunch of them are kind of within the Tokyo area. So I was, I played kind of the equivalent of Little League, growing up in Tokyo, and then I joined kind of Little Leagues in Staten Island, and so it was, baseball was a common universal language, which really helped me to assimilate to life in the U.S.
Nice. So what happens after high school? You go off for college and then get a job on Wall Street. Anything interesting that we should touch on in that period?
The funny thing is, so nowadays kids are way more prepared. Back then, kind of the late 90s, everybody was either doing like investment banking or like consulting. Those were like your two paths. And I went to a business school undergrad at Georgetown, and job interviewing season, recruiting season, on campus recruiting came around, and I didn't know what to do. I had no idea what I wanted to do for a career, but I'd ask my friends, my classmates, and everyone was like, banking. I'm doing investment banking. That's what I'm doing. And so I was like, all right, I guess that's what you do. So I started applying for all the investment banks. And to be honest with you, I had no idea what investment banking was. It was just like the fancy buzzword. I had no idea what analysts did or anything. But like just talking to them, they'll talk about financial models and this, that, and the other, and net present value calculations and cash flows, and sounds great. So I absolutely just like BS my way through every single interview I had, pretending like I knew what a financial model was. And this was the last year of like the big hiring boom. Like this is like right around the .com bubble bursting and right on that edge. And Citi took the largest group from Georgetown ever. They had like 10 or 15 analysts they took from Georgetown that year. And I just happened to be one of them. The very next year, I think they only took like 3. So timing was everything as far as kind of making my way to Citi. But somehow I got, I finagled an offer out of Citi. And at the time, I was given an opportunity to go back to Japan. I was offered from both the New York office and the Tokyo office to join a part of the investment banking analyst class. And I chose obviously the New York office, thinking that if I wanted a career on Wall Street, let's start in New York. And so I said, okay, let's do it. And I started in July of 2001 was when I started my career. And then 2 months later, we had 9/11, right? And the Citigroup office was like 10 blocks north of the towers. And so, and we didn't get back to the office, for months, kind of afterwards, with the cleanup and all of that happening, which, so I had a really like hard, traumatic start to my Wall Street career, with the tragedy and the aftermath and all of that. But I was with, really, really good, smart coworkers. I learned a ton, slept in the office a ton. The 100-hour weeks and the sleeping bags in your cube. Those are all real stories that I went through myself. And, while I probably wouldn't wish that lifestyle on anybody, the steepness of the learning curve and all of that, like, it was a fantastic learning moments for me that, I think has really kind of served me well for the rest of my career.
And you didn't burn out. I mean, so I went to school down at Emory, right? And I had the same thing, right? It was like junior year, and a lot of I had no idea what I was doing and what I wanted to do. And my friends who were older, who had graduated, said, you got to go into banking. Like, that's what everyone does. You go into banking. And so they helped me kind of bullshit my way through some of the, the internship interviews and the super days and stuff like that. And, a lot of my buddies, I didn't end up going into banking, but a lot of my buddies went into banking, and then they go into private equity. And now a lot of them, the startup space is so hot. And actually some of them are leaving for crypto. And now a lot of the kind of Googles and Facebooks oftentimes pay more than the big banks do. But a lot of them burn out of the bank, of the 100-hour work week type thing. But it sounds like you stuck with it. I mean, you're still in the financial world 30 years later.
So I think for me, for one, like I said, nowadays I feel like to get a banking job as a full-time analyst, you had to have done the internship. Like there's no way that without kind of the internship from the firm you can do it. And a lot of people are like applying for stuff after their freshman year, sophomore. Like they have their lives way more together than frankly I did, call it 20 years ago. So I'd never get a job on Wall Street today. That's for sure. And then separately, to your point about kind of not being burned out, it's funny after, I mentioned 9/11 happened. And that was so traumatic, a moment where a lot of my friends quit. They were like, I can't do this. And how do I come back to work? And after we've seen the things we saw that day and all of that. And, I gave it a long, hard look, about whether I myself could go back to work, in Tribeca, and kind of keep going. But like back then, like you signed like your commitment letter, and to say, hey, you will be an analyst at Citi for 2 years. Or it was called Solomon Smith Barney back at the time. This is before we did the full rebrand to kind of Citi. And the fact that like I signed something meant something to me, that I committed to doing this and I didn't want to quit. So ultimately I decided to stick it out. And while things got hard for sure, I kind of always kind of went back to, no, you said you do this for 2 years. And so you got to see it through, as kind of my the reason for why I stuck around. Now, of course, we had layoffs. Citi didn't have the same commitment to us as we did to them, because we had so many different rounds of layoffs during my time, and loyalty, things like that, kind of go out the window pretty quickly in the real world, especially kind of like Wall Street. But I always kind of came back to, hey, lots of people want the job you have. You should be grateful, and let's keep going as far as you can.
Yeah. So let's fast forward a little bit. How'd you get linked up with Barry Silbert?
So, I've had, many like setbacks in my career. I was laid off from Citi.
Oh, wow.
In January of 2008, kind of the financial crisis happens, kind of reduction in force everywhere. And kind of the group that I was in, at the time that focused a lot on like student loan businesses, where, the managing director got laid off and like directors got laid off, like a whole bunch of people. They were eliminating the group slowly. Like a week or 2 weeks before bonus season, bonus payments, they laid me off in early, in kind of like mid-January. And after that, I took a few months off. I needed the break from kind of the intense, the working lifestyle that I had for 7.5 years. And I said, okay, what was I going to do? And the first job I was actually applying for was with Morgan Stanley. I had gone relatively far down with kind of the same student loan industry group at Morgan Stanley. And when they got to the offer stage, they told me that Morgan Stanley had a hiring freeze, that they wanted to give me an offer, but they couldn't because they were not allowed to kind of add headcount. This is like obviously middle of 08. And so as much as they wanted to kind of bring me on and join the team, they said, sorry, hopefully this goes away soon, but there's a hiring freeze and you can't join us. So I said, okay. Meanwhile, I kept looking. I met the old CEO of a subsidiary that Second Market had called Plurus Valuation Advisors. They were a valuation company that did all the valuation work for illiquid assets. They would do like market comps and private comps and some DCFs and try to figure out a valuation to a lot of the assets that have kind of become illiquid.
And are these like 409As of private companies, things like that, or more?
Both. So some of it was like the mortgage-backed securities, ABS, looking through the asset to try to figure out what a particular bond might be worth, or some private company stock, like limited partnership interests and minority interests and things like that, and trying to really do a valuation. And so my last few years, as I mentioned, was kind of in the student loan space. So I knew a lot about student loan bonds. And they hired me on a consulting basis to build a database of student loan bonds. They want to know stuff like QSIP and the issuer and what the loans were and all of that stuff. And really kind of build this database. But it was meant to, I think, initially be like a temporary gig. Said, hey, you'll do this for a while, build this up, and then, we'll part ways and kind of go on our merry way. And then a month into me working for Plurus, I got a call and said, hey, Barry wants to meet you. And I didn't really know much about Barry and kind of the Second Market business at the time, other than the fact that they owned the company that I was working at. And so one day I went upstairs to his office, I just shook his hand and talked a little bit myself. And they said, all right, you're going to be part of us now. So my project got moved a month into it from Plurus to Second Market. And I was given a title as Vice President of Data and Analytics at Second Market. And my job was to create a database for every single asset that Second Market was trading for at the time. Let's provide data, transparency around, the toxic assets and the private companies and all of the stuff that we were trading for at the time, especially like Lehman Brothers. Bankruptcy claims was a big thing kind of at the time when Lehman filed. And let's provide, capital structure and what balance sheets and whatever to really know what these bonds were really worth. That was my initial job at Second Market. This is in 2008. And we can get into this later, but there are a lot of people from that world that are still active in crypto. As we entered kind of the crypto phase, they each they were with me for a number of years, and they've now gone on to kind of senior leadership positions at various crypto businesses.
Who are these folks?
So one of my first people that I met was Bobby Cho.
Oh, wow.
Bobby was like a first-year analyst on the research side, and so maybe day one or day two of my time at Second Market, Bobby came over and introduced himself to me, and it's like a really courteous, proper he was an analyst, I was a vice president, and he was very deferential and respectful, and let me know how I can help you and all of that. And then we had an intern at the time was Terrence Dempsey, who's at Fidelity.
Fidelity, yeah.
And Terrence was an intern at the time. And I gave Terrence his first full-time job. So his first job was with me at Second Market in data and analytics as an analyst, helping me, build the database. And then, over time, a couple of years later, we had David Knitsky join us. And David, who's obviously kind of now a CEO at Kraken Financial, I believe, and previously having done stints at Circle and a few other places. Those are the first guys that come to the top of my head as early guys who were with me kind of at the Second Market days that have now gone on to to bigger things outside of kind of DCG family.
All right, guys, we're going to take a quick break from the show, talk about two sponsors. You guys heard them on the last two episodes. It's LUKKA Tax and Exodus. I wanted to re-record both of the ads, though, just because they're kind of one story and one update from one of the companies. So I just wanted to fill you guys in. The first one is LUKKA Tax. LUKKA, it's tax season right now, as some of you guys probably know. Taxes are so damn complicated that the IRS pushed back the deadline another month, so you guys, including me, could figure out our taxes. For folks in crypto, you guys know that crypto taxes can be an absolute nightmare. Fun little story, I tried having my accountant, this guy Josue, figure out how to do my taxes, and it was an absolute nightmare because of the crypto, right? A lot of us at least have crypto held on a few different platforms. I've got crypto on like Exodus, a few other places, and you've got to deal with FIFO, you've got to deal with LIFO, there are exchanges, there are custodians, there are wallets, and what LUKKA Tax basically was able to do was, first off, super cheap, right? I had Josue go over to tax.lukka.tech/empire, which is my URL. I get hooked up if you guys go over there and create an account, so do that. But I had Josue head over to LUKKA, and it just made it super easy for him to do my taxes. So you can have your accountant plug into LUKKA, you can do it yourself. But yeah, I'd highly recommend LUKKA if you guys are trying to do your crypto taxes this year. tax.lukka.tech/empire. All right, head on over. All right, a lot of you know the second partner for the show is Exodus. I bet 20 or 30 people hit me up last time, said, is Exodus legit? Who is Exodus? How do you hear about Exodus? So I want to share a little background on that story. Basically, Exodus, a lot of people don't know them. They've been around since 2015. They have over 100 employees. They've raised a boatload of money, which we'll talk about in a second, and they're one of the best kept secrets in the space. Hardcore Bitcoiners, people who have been around since like 2012, 2013, love Exodus because they basically let you manage your private keys, which is really sought after. If anyone's heard of, not your keys, not your crypto, Exodus allows you to basically do this. They got super low fees when you're buying Bitcoin. You've got a built-in exchange. They let you plug into DeFi really easily. So they're an amazing wallet. When I first heard about Exodus, actually, our sales team had brought it to me and said, do you want to work with this company? I hit up Peter McCormick because I knew that they advertised with Pete. Pete said, yeah, they're super legit. I do a lot of my business banking with them. He basically gave his stamp of approval. I checked out the product, gorgeous UI, UX, really good security. So I'd really recommend it. They just raised $59 million in 4 days. Super impressive. So they're really well capitalized. And yeah, I'd recommend checking out Exodus. You can find them at exodus.com/empire. All right. Let me know what you think. I love learning about the kind of old school days of just different industries and seeing things like the PayPal mafia, right? Who has then gone on to create things like, Yelp and a number of other different huge platforms, right? And so we've got the second market mafia here.
That's true.
So Barry was running second market. You get to second market. You're VP of data. You're building up this database for illiquid assets. From my understanding, second market basically made markets or secondary markets around illiquid assets. Is that a one sentence overview that is fair?
Yeah, so I think at the heart of it, Barry, who was an investment banker himself, like early in his career, wanted to create like a marketplace for illiquid assets. So off the run, non-exchange traded, so often illiquid financial assets. Like there was no place to go to even get.
So like what are 2 or 3 illiquid assets that are kind of funky that you guys might have traded?
So one of the group that I spent most of my time on was kind of the fixed income trading desk. So things that were liquid that became illiquid as a result of the financial crisis. There were lots of things that were trading for a dollar that quickly became 20 cents on a dollar, 30 cents on a dollar, that were relatively opaque, like CDOs, mortgage-backed securities, all of that stuff. And then there were things that were more inherently illiquid, like the private company stuff. Private company stock wasn't really meant to be really like traded actively. And so, second market became really famous for trading, pre-IPO shares of Facebook and LinkedIn and Twitter, kind of like the hottest late stage venture-backed private companies. And so I think those were, 2 of the products that we were really famous for at the time.
So you've got second market. So Barry, my understanding of the story is in 2011, Barry discovers Bitcoin, right? And it's this, illiquid asset. It's pretty exciting. And he did the full kind of, okay, is this a scheme? Is this a scam? Like, what's going on with the Silk Road thing? And it took him, I don't know, 6 to 12 months to basically realize that this thing was legit and this thing was going to stay around. So now you come up to 2012 and Barry's talking about Bitcoin nonstop. Do you remember those days? Is that story right?
Absolutely. No, that story is 100% correct. As far as I can recollect, that is accurate. Barry, I think it was 2011 when he first, kind of found it. 2012, he'd come into the office and, that's all he'd talk about was Bitcoin. And you'd go back to your desk and you Google Bitcoin back in 2012. There wasn't like really good like Wiki 101 type stuff unless you were like a tech person. There really wasn't sort of a useful beginner's guide to Bitcoin back in 2012. And so you go down the Bitcoin Talk forums and try to figure out what is this thing and not really having a good understanding. But ultimately, we said to Barry one day, we said, hey, either stop talking about Bitcoin because we're tired of hearing about it, or tell us what it is in like layman's terms, in like basic plain English, tell us what it is. So that was late 2012, early 2013 when we had this conversation. And he really like equated kind of Bitcoin to everything else that we were trading at Second Market. It was illiquid. It was funky, off the run. No one really knows what it is, but there's probably a market there. And a bid and an offer, and we can try to connect the two parties, and said, okay, that does kind of sound like the weird CDOs and everything else that we were kind of trading at the time in terms of difficult to price, value, settle, all of that stuff, and said, okay, let's give it a shot. And this was whatever, Bitcoin at $80 or $90.
So Bitcoin was at $80. Were you guys, sorry to interrupt there, but were you guys think like all these other illiquid assets, they don't have the opportunity to appreciate in value? Well, they do, but like it doesn't go parabolic like something like Bitcoin did, going from $80 to $1,000. So were you guys like a CDO doesn't appreciate 10x overnight, right? So did you guys think about Bitcoin saying, oh my God, this thing could go to $1,000? Or was it just another illiquid funky asset where you could make a market?
It was more the latter. I don't think we really thought about kind of the asymmetric return possibility, certainly kind of at the time. If I did, I probably would have bought more, right, than I did. But to be honest, like, at $90, $100 a Bitcoin, and I remember going to Barry and be like, oh, it's at 105 today, 106 today, or whatever it was, and being really excited that it was up $1 like over the next, over the last 24 hours. But like the possibility that it might go to zero was really like real, right? Like this experiment might not work out. This experiment might blow up. It was a real possibility at the time. And so we had a really like careful, thoughtful approach to how we did it. Now, in retrospect, we should have just like aped in and bought all the Bitcoins in the world, right? But like we were also running it for a broker dealer, and we wanted to sort of protect our downside. So we were very like meticulous and thoughtful and conservative as we thought about what to do and how to get involved.
And so was this the start of DCG, or was this the start of Genesis? So for those who don't know, DCG, Digital Currency Group, owns what? It's Genesis, Grayscale, CoinDesk, Luno. I think CoinDesk acquired TradeBlock. So there's, it's kind of this
Foundry, the mining and staking
Foundry.
business. Yeah.
That's right. They're doing some incredible stuff as well right now. Mm-hmm. What came first? Was it DCG and then Barry and you guys had this idea to launch like a trading desk and an asset manager, or was it kind of like there were a few different companies and then you put a portfolio or a holding company on top of them? What did this look like?
So sequentially, you probably have to ask Barry to get the full taste, but my understanding is Barry started buying Bitcoin himself. And then he started to kind of make angel investments into like the blockchain 1.0, Bitcoin 1.0 type businesses with the Bitcoin that he had purchased. And so, we talked about kind of the Coinbase IPO from a couple of weeks ago. He had bought Bitcoin, sold that Bitcoin, and I think took the cash and invested into Coinbase, for example. And Zappo and BitPay and kind of like the old, like the first types of businesses. So he was doing this personally, with his own money. We created kind of the trading desk in kind of like March or April 2013, I want to say. And then the Bitcoin Investment Trust came, I think, in August. So it was like a few months after we had launched the desk, and we can get liquidity. And we can source Bitcoin and start to kind of make some contacts within the ecosystem for sellers, because that's what we really kind of needed, obviously, to kind of create the shares. Was in August of 2013. So this was all within Second Market. So we didn't have like other divisions or legal entities at the time. We had our trading desk, and then we had our trust. And that was kind of the start, right, of kind of the DCG, Genesis, Grayscale businesses.
Got it. Who's buying this stuff in 2013?
So we got it wrong. We were obviously a SEC and FINRA registered broker-dealer. And our contacts at the time were like bond buyers, right? Because that's what our desk was really like trading. And so when we initially said, let's try to find institutional buyers of Bitcoin, naturally we go to our Rolodex. I don't even know if people refer to those as Rolodexes anymore, but your contacts within the space.
Pick up the phone, smile, and dial.
Exactly, right? And so you'd call up the people that were buying the CDOs, the MBS, all of that stuff, and you start talking about Bitcoin, they just hang up on you. Like they thought you were absolutely crazy, that like they just had no time of day for you. It's literally show me bonds, come to me, or don't call me. Was really like and we were smiling and dialing and hitting the pavement and getting absolutely nowhere with kind of the East Coast buyers, institutional investors in 2013. At the same time, we through like Barry's network started to like meet some of the Silicon Valley venture capitalists, and they were like waving it in. They were fascinated with Bitcoin's technology, right? Kind of being in San Francisco Bay Area. They understood kind of the blockchain and what it could mean, and potentially like a new form of money and disrupting existing industries. Like that narrative fit really nicely into like the Silicon Valley way of thinking and investment thesis. And I mentioned earlier about Bitcoin going to zero as a possibility, but to them that it could 100x or zero was like, okay, so that's like every other bet I've made, right? It's just like a VC portfolio's binary outcome of 100x or zero. And so from a risk reward perspective, that asymmetry, they're like, I can understand that. So our first buyers were really kind of the high net worth individuals living on the West Coast, venture capitalists, and that were like playing with their PA money and putting it into Bitcoin, or Silicon Valley entrepreneurs who said, hey, I've got some money laying around. This Bitcoin thing kind of looks interesting, so let's buy. So that was kind of in 2013. That was pretty much our buyers.
Any famous or big name folks you can share from those days?
Lots of famous people, but I can't talk about any of it. Unfortunately, I wish I could for lots of different reasons, but I cannot.
That's all right. I just shared something on Twitter earlier today. We last month I saw that 27 folks from JP Morgan had subscribed to our newsletter, and then today news leaked that JP Morgan's thinking about an actively managed Bitcoin fund, and I was basically like, I can see on the back end all these big financial institutions subscribing to the newsletter. I wish I could. It's exciting news, but yeah, no, I understand where you're coming from. It's a little different, right? But because we're not taking in their assets. But yeah, anyways, we I think one thing that would be helpful for you to explain to folks is just like what trading looked like back then, and like what OTC looks like in an illiquid market. So can you just explain like the concept of OTC markets and like trading via voice and like, where Skype comes into this, because I know everything in crypto at least used to be based around Skype. Like, what does this look like for folks who don't know the OTC market as well as you do?
So I don't even think Skype was really a thing in 2013. Like the use of Skype for OTC trading, I don't think that was around in 2013. I think it was much more phone calls and emails, and stuff like that, more than kind of a chat function. But in 2013, like we realized very quickly that we were never going to have a buyer and a seller of Bitcoin in the same hour, or maybe the same 2-hour window, right? Like sometimes randomly you might get a seller, and then maybe a few hours later you might get a buyer, and which forced us to take balance sheet risk. We realized that like we couldn't run like a full agency business because the chances of us having a buyer and a seller at the same time was just not realistic. And so, there were only two exchanges at the time, right? There was Bitstamp and Mt. Gox. That was our two like exchange liquidity sources at the time. And if you had to like wire in money to like Mt. Gox or Bitstamp, it would take days.
And Bitstamp was in like Slovenia, if I remember correctly.
Oh yeah, they were in Slovenia.
Yeah, and Mt. Gox was in Japan.
That was in Tokyo, yeah.
In Tokyo, okay.
So, and you literally like you hit send, and you're like you keep your fingers crossed that the money gets there.
Yeah.
Right, like please make it. And so we realized that we had to take balance sheet risk, and the sellers at the time were like the anarchists. They are the ultimate libertarians. Big banks are bad. Financial intermediaries are bad. So like, and here we were like a regulated SEC FINRA registered broker dealer saying, sell your Bitcoin to us. Oh, by the way, before you do, I need your driver's license. I got to run a background check. I got to run all of this information, AML, KYC, Bank Secrecy Act, all of that stuff. And we didn't fit in to that ecosystem, as you might imagine. They were like, I'm not giving you anything. And I do trades in cash, and like, don't ever call me again. So, right, that was kind of that world. And so, and as I mentioned, we didn't fit in with the buyer base either, because the guys we'd call would hang up on us, right? And so we didn't fit in really neatly into either sell side or buy side back in 2013, much to the chagrin of the buy side, clearly. But that was really what it was like in early 2013, where somebody would come in, maybe they'd buy, 10 Bitcoins, 100 Bitcoins here and there, which, like I said, was maybe, a few $1,000 at the time. And then, and the sellers are like, you're literally calling, hey, you want to sell some Bitcoin today? And it was literally just exchanging phone calls and emails to kind of get stuff done. Looking back on it, like it's incredibly primitive form of trading for such a high tech new asset as kind of Bitcoin was. The way we were trading it at the time was anything but.
I remember so the biggest change from that happened in 2017, it felt like, was the demand was actually there, but the infrastructure was not there. And so in 2018 and 2019, a lot of the infrastructure got built, and these guys like Jump and DRW like built out nice GUIs and things like that. Do you guys, what does it look like? Can you just so back then, so 2013, 2014, it's all voice. Then things start happening on maybe Skype and Telegram, and now where are we at? Or did I get that right with kind of Skype and Telegram? Like what was the evolution of the OTC trading?
So I think for 2014, Mt. Gox happens, and we're like, oh gosh, Bitcoin is going to zero. It doesn't go to zero. It rebounds. 2015, 2016, dark crypto winter. Like, it was like, are we going to make it? Is this really going to be a thing? It's trading at a few $100s. It's not really going anywhere. And then 2017 happens, right? And kind of the ICO boom and the activity and the level of activity. Now, forget infrastructure for a second, because to your point, like the way traditional assets trade, was definitely not in place in early 2017. Forget that for a second. We had no people, right? And then this deluge of trade orders and interests and signups and all of that stuff like hits you. And I don't really think there was a company in crypto that was ready for that like massive wave to hit us. And so, for us, we're like, what do we do? What are we doing? Like, there's so much interest. And we just didn't have enough people. I had maybe 7 employees or something kind of at the time. And we're like, the trades per day was going from like, $1 million a day to $10 million a day to $100 million. Like, it just literally like went exponential at that point. And every like entrepreneur CEO I talked to were saying, yeah, my exchange was down for hours. The order book glitched. Like, we just had a throughput problem on the exchange or whatever it was. And everybody was just like absolutely scrambling to kind of deal with it. The jumps of the world were just starting to try to like figure out what is this. And while, obviously 2017 was really like retail led rally, where, it was really kind of the first moments where institutions were like, what is this? And started to at least like follow the headlines that were on CNBC. Right. And I think they really kind of started to do their homework, given kind of the level of interest that we saw in Bitcoin going from $1,000 to $20K or whatever it was, during the 2017 run. We just had too many counterparties, and a lot of Asia got involved at that point in time. And so that was kind of when the chat functionality kind of became way more important, because we started working with not just one guy, but 2 or 3 people within a shop. And you just need to have everybody kind of on the same page at the same time. And so emails were really like one-on-one or just too delayed. And so we said instant communication, instant feedback. And so we started trading a lot more via that messaging mechanism, which is still, for the most part, trades are still kind of getting done over Skype and Telegram today.
In the traditional world, a lot of the kind of chat happens on Bloomberg, right? Do you think, like, will somebody develop that in the crypto space? It's tough for me to see it staying on Skype and Telegram forever. Or is that being
I'm with you,
out?
and I think it's a bigger issue for kind of regulated, businesses that have to have like communication logs and kind of surveillance from compliance on what you're doing and what you're selling to customers and all that stuff. So I'm with you. I don't believe that kind of the existing chat functionalities will work, especially as kind of the big banks start to play, right? Big banks are not going to agree to stuff over Telegram and being like, look, compliance, this trade is good. So I'm sure there'll be more use of Bloomberg. But at the time, there was not a single buyer of Bitcoin that was also on Bloomberg. Like that Venn diagram just didn't intersect at all. But more and more, I think, as more institutions kind of start to play in it, you'll see that a lot more. But like inertia is also real. People that are used to doing certain things a certain way, habits are hard to break. And so like whatever the new product is has to be markedly better than the Telegram or kind of the Skype experience to get users to move. And I don't know what that is at the moment, because I feel like we are already on like 7 or 8 different chat platforms as it is. We don't need to just kind of add another one just for the sake of whatever, because we don't think Telegram is ready.
Yeah, no, we don't. We don't need another Telegram, Signal, iMessages, Slack,
WhatsApp,
Microsoft Teams, WhatsApp,
all of that. Yeah.
Twitter DMs. Yeah, totally. All right, we're going to jump into the report, because you guys had some crazy numbers. But before we do, I had one last story that I wanted from the kind of early days, which is I've heard that Barry gave every single second market employee 2 Bitcoin and said, spend 1, save 1. Is this a true story?
Confirmed. That is true. And, in retrospect, that was like, as much as kind of that, I mentioned there was no like wiki Bitcoin 101 stuff available on the internet at the time. There is, and I'll still say this today, there is no replacement from like creating your own wallets, and like going through the process of creating your own wallets, keeping your own private keys, and like sending and receiving Bitcoin to really like understand how it works. And I'll give Barry a lot of credit, because that hands-on experience for all of us was what really said, oh, that's how it works. You can read about it, but to like actually do it was one thing. So we said, hey, we get 2 Bitcoin, keep 1, spend 1. Okay. We had to like figure out where to spend our Bitcoin, right, in 2013. And back then, there wasn't a lot of legal places that like accepted Bitcoin as a form of payment. And so all of us ended up spending our Bitcoin like in various places, and you know, the alpaca socks, like the famous alpaca socks thing. There was a couple of guys that bought that. I found a winery in Australia called Blue Plate Winery that accepted Bitcoin for like a case of like red wine, and said, all right, that's what I'm going. I spent my 1 Bitcoin on this case of wine, which naturally is the most expensive case of wine I will ever purchase in my lifetime. But it's probably better than some woolly alpaca socks, is probably my guess. Because that is the most expensive pair of socks anyone will probably likely purchase.
Yeah. That's amazing. That's amazing. That's not a bad idea. I mean, we're hiring like crazy as well right now. We just doubled the size of Blockworks. We're about to double again, and you know, we try to hire people in the crypto space, but it's also really fun to hire people outside of the space and bring them up to speed is always a fun challenge. And so we have a channel in our Slack just called it's called Learning, and we're always stressing people to share, you know, good podcasts and articles in there. But I mean, yeah, it makes sense that the better way to learn would just be, if you want to learn about DeFi, go try to put some Ethereum into a MetaMask and try to trade on Uniswap. Yeah.
And you punt around on it. I think it's kind of the best hands-on learning experience you can possibly have. And you send the transaction, and you're like, that's how it get picked up in the next block, and you see the inputs and outputs, and you kind of follow the transaction. It's actually, you know, it was a lot of fun.
Yeah. There's always that feeling of like sending a transaction, and then you're like, oh my God, is this going through? And you have to pull up you pull up Etherscan. You're like, it says it's here. Like
that same experience I was relating earlier about sending money to Mount Gox and hoping and praying. There's a little bit of that sometimes with certainly the new guys, to make sure that you're sending it to the right address and all of that.
Yeah, very much so. All right, so you guys sent me the report, the Q1 report, and it's pretty crazy. And I'm going to walk through 4 big numbers here. And I'd like you to explain each of the numbers and just what they are. So the first one is 20 billion in loan originations at Genesis in Q1. So I'm looking at the Q1 market activity snapshot on the second page. Yep. What does 20 billion in loan originations mean?
So let's speak a little bit about context. So we have, our 12/31. We'll get to the March 31, period and loans outstanding in a second. But, there's kind of our number at 12/31, which is like 3.8 billion or whatever it was. And then kind of the March 31 number. The originations is kind of all of the new loans that we made between 12/31 and March 31. And the counter to the originations is the paydowns, right? So it's period end loans plus originations minus paydowns equal our March 31 period end loan number. So $20 billion is the total number of loans that we extended to the marketplace in the first 3 months of 2021. Now, as a context, we launched our business in March of 2018. And from March of 2018 through December of 2020, so year end, we had done 20 billion. You add up every single loan that we had done for the first, 2 years and change of our business, you would gotten to 20 billion. And we did the same amount just in the first 3 months of 2021. So yes, we've been busy.
It's been a good year. So I'm realizing now I'm going to get all these comments in the YouTube section saying you jumped in too quickly, and we need an overview. So just an overview for folks. 2013 to 2018, it was pretty much all trading, Genesis trading. 2018, Genesis launches Genesis Lending. They then launched their custody business through an acquisition of a firm in the UK called Volt. and they launched their derivatives trading desk in May of 2020. Did I get that
Yes,
right?
that's correct.
Okay, cool. My understanding is that you guys are building basically a prime broker for the crypto space. So any institutional investor who wants to get access to the crypto markets, you want to buy a Bitcoin, you want to buy Bitcoin futures, lend against your Bitcoin or crypto, you can do it through Genesis. Is that?
That's correct. So prime brokers exist in kind of the traditional markets, and it's always kind of been we don't have a PB in crypto narrative, and it's also hard to kind of build PBs when there aren't investors, right? And so it would have been a mistake for us to think about a prime broker in 2014 because we had no institutional investors. A lot of the infrastructure really didn't exist, and so now we're certainly at a place where having a one-stop shop for institutional investors to do whatever you want, whatever it is kind of you're looking to do on the trading, lending, custody side of crypto, you could do with Genesis.
For those who don't know, what's the difference between a prime broker versus a bank?
Oh gosh, so it's funny. I am trying my very best to not be a bank.
Got it.
Banks traditionally are taking like customer deposits. There's like an FDIC guarantee up to a certain dollar amount. And then you turn around and you lend those funds out to obviously lend, to create, auto loans or credit cards or mortgages or whatever they have kind of within their loan portfolio. And with kind of oversight from the FDIC and the OCC and kind of various bank regulators within the United States. The prime broker, although a lot of banks have prime brokers, they are much more on the trading liquidity, kind of catering towards the hedge fund space, where yes, they do hold deposits for a lot of hedge funds and they pay interest on it, but they're effectively like the treasury management for hedge funds that say, okay, and I give you an order, you go out and execute it for me. Best way that you can, as well as sourcing financing. So I need to lever my portfolio. I need to get a loan for my trading position or whatever that is. And banks you don't go to a loan to get a margin loan for like your securities like trading account. You do that through your prime broker.
Got it. Okay. So when people say prime brokers don't exist in crypto, is that because we're still missing? So is that because we're missing cap intro? Like, what is the?
It's a few different things. One, the traditional PB, the traditional equities prime broker, you could do through a regular broker dealer, right? So Genesis Trading, which is an SEC FINRA registered broker dealer, could do that everything we just kind of talked about: the spot derivatives, sec lending, and custody through like a broker dealer. In crypto, you can't. There are limitations as to what a broker dealer is allowed to do and not allowed to do, as well as net capital constraints of a broker dealer that make it really difficult, given how crypto is treated on the balance sheet of broker dealers, to have a lending and borrowing business. You have to have billions and billions of dollars of capital to have a business like ours. Kind of exist in the traditional like broker dealer space, and because Bitcoin's not a security, I don't think the FINRA and the SEC are like, then why do you do this through a broker dealer if what you're primarily like trading and lending is a non-security in the first place, and because like Bitcoin is regulated, in the U.S. anyway, kind of at the state by state level. There isn't like this federal oversight. There isn't this one license that you can go out and get that lets you do everything that I just kind of talked about within the crypto ecosystem. And plus, half our clients are international. And so different jurisdictions around countries around the world have different rules, and you got to get that license. You got to have a local entity in Singapore. You got to do this, you got to do that. And so it's very difficult to like pull off under like one legal entity. So legally, it's hard to pull off. And number two, I think the holy grail of crypto is this like cross margining capability, the ability to have exposure from like one place, and then have an affiliated exposure, but have it offset against each other. So an example might be you have a position, you're long on BitMEX, but you're short on FTX. Okay. So if you look at the entire portfolio, you're neutral. You're neither long nor short when you look at the portfolio. But like, unless you have a view into knowing what your exposures are, people aren't willing to lend to you kind of at that net exposure risk, right? You only know one side of the trade. And I think a view of the prime broker is if you put on the trade through us, I know exactly where you're long and where you're short. And so I will give you additional leverage, kind of given your risk position. So that's one. And number two, I think, is just kind of like exchange connectivity and the ability to like fund one account at Genesis and let you trade across 20 different exchange venues without like funding each of them individually.
So instead of going and opening an account at Bitstamp, Coinbase, Kraken, FTX, you basically fund your Genesis.
You fund
account.
Genesis, let Genesis deal with the funding of each of the accounts and get you like aggregated liquidity across an order book.
And so then Genesis can basically say, I know how long you are. I know how hedged you are. I'll lend you this amount because I can see all of this.
The entire portfolio. I have the full picture of your total positions.
In traditional finance, the settlement, the custody, and the exchange are typically separate, right? So you might have like State Street as a custodian. Who does settlement? Is it DTCC is like the main? And then, the exchange might be like the New York Stock Exchange. They're all very separate. And it kind of creates a system of checks and balances. In crypto, you look at a company, Coinbase, when I see their business, it's like they're doing the settlement, they're doing the custody, and they're the exchange. Is that an issue, do you think, moving forward?
I think it's funny because like the big banks always talk about this particular issue. And frankly, for a lot of exchanges, like if they didn't have to custody, that's a huge lift off their burden too. So I have to imagine that like for guys that just make money making markets, if you can take like the hacking risk off the table and let somebody else like deal with it, that might actually be more ideal than the current setup. But I actually think, we've had this crypto market infrastructure evolve without a single bank having a say, right? Because they weren't involved, the market just naturally evolved to kind of where we are. And now, as you mentioned JP Morgan's of the world getting involved, they're trying to figure out like, how do we do this? Like most of the time, equities or fixed income, they set up the way things are settled and cleared. They're coming into a place where billions of these things are trading every single day, and they haven't had a single word of input into how all this should work, right? And so it's a question as to whether or not the banks are ever get comfortable with settling the way crypto gets settled today, or do they try to create their own interdealer market? Do they say, okay, amongst us banks and maybe some crypto market makers, let's create the traditional method, right? Let's have an exchange where like seats around the table and the banks and liquidity providers in crypto there. But like the settlement is happening elsewhere in a separate entity that has nothing to do with the actual making the markets portion. And each of the counterparties at the table, whether or not they're part of the exchange or part of the clearinghouse, like the settlement mechanism, and have that like separation of responsibilities. I would not be surprised as more and more banks enter the space that there isn't a push for that latter model, kind of and try to create, at least amongst themselves, that if you want to trade, if JP Morgan wants to trade, crypto, and then looking for wholesale, like institutional, like markets, that's the way they'll settle amongst themselves. And let intermediaries potentially like a Genesis who sits in both places, who can sit there and be a part of that institutional market and have it settle one way, but then also kind of work with the crypto native settlement mechanisms that, which is basically behind every single trade we've ever done.
In the same way that the banks got together one day and kind of, from my understanding about the DTCC, the banks were behind the creation of the DTCC.
Absolutely.
Okay.
Absolutely. And the way things settle right now, where like one side has to move first, right? Where you're like, I either get money first and then the crypto
trust.
comes.
It's all about the trust.
Right?
Yeah.
It's, I just don't think a bank is going to get comfortable with that, like, somebody going first narrative.
Yeah.
They're much more used to like instantaneous delivery versus payment, settlement mechanism that you see in traditional markets.
Yeah, totally. All right, let's get into the report because I know a lot of people are listening to this to hear about the report. I'm actually, as I look at it, I wanted to go down the kind of 20 billion in loan originations, 9 billion in active loans, 30 plus billion in spot, 10 plus billion in derivatives volume. Instead of going down one by one, what stands out to you? I mean, this is a 23-page report. There are different things that stand out to me, but what stands out to you here? What should people be looking at?
I mean, look, certainly for this quarter, I think the spot volume growth, I think, is very, very notable. We had, I think, on page 9 or 10 of our report, we sort of like quarterly bar charts of our spot trading volumes. And we had done about 8 billion, I want to say, in Q4, which was like a doubling of Q2. And said, wow, we're now like at $8 billion of quarterly like spot trading. And then we got to like $31 billion kind of in one quarter, right? We basically did 4x our volume like quarter over quarter. And like, we talk a lot about, and the funny comparison, we talked about how 2017 was really like a retail-led rally. We hit $1 billion of trading in a month in November of 2017 for the first time. So we were at $1 billion in 1 month in November of 2017. And here we are doing 30 some odd billion dollars in 1 quarter in 2021. But that's because it really is institutions. Right? That it isn't the retail narrative. We are seeing way more of the flow this time because the people that are really actively trading are kind of the Genesis, institutional accounts as opposed to smaller traders that might be kind of trading on the exchange, at least from what the data tells me.
Yeah, I'm looking at the chart right now. It's on page 9 for anyone who wants to pull up the quarterly report, and you can go to blockworks.co. We'll have it there as well. 4 billion. To 5 billion to 8 billion, and then the chart just pops up to 32 billion. It's pretty crazy. I see something here. It's kind of just in the text. 33% of spot trading leveraged our Prime Smart Order routing engine. That's what we were talking about earlier, where they fund Genesis and it goes through. Yeah.
So that one is actually where there's no human intervention.
Got it.
So that is somebody who's putting in an order to transact with Genesis via our API. And then the trade gets executed with Genesis, and then our tech automatically hedges that trade out on the other side too. So somebody sells to us, our tech is selling on an exchange or to an OTC source on the other side without like a trader sitting in between.
Got it.
Kind of doing the actual manual quoting and all of that stuff. But what's interesting is while it's 33% of the dollar volume is like there's no human intervention, but it's like 98% of the trades have no human being like touching the trade. What that just tells you is when people still want to do $5 million, $10 million clips, they still need a human being on the phone. I think they still feel better knowing that there's a person that's executing the order for you, and still not yet all that comfortable clicking a button. And then and then hope that the $10 million trade actually goes through.
I don't blame them. If I had $10 million to trade in Bitcoin, I'd probably want to talk to my friend Michael Moro on the phone. So I don't blame him. In terms of you mentioned quote unquote institutions are here, right? And the institutions are buying. Institutions are really can be broken down into large hedge funds, endowments, pensions, big allocators. Sometimes, just really high net worth individuals get categorized in this, family offices, and obviously corporates is the narrative. You guys just launched Genesis Treasury, which I've heard from a few folks. They're loving, by the way, so nicely done on that. What percentage of the 31.5 billion in Q1 was corporates?
So when we look back at our data, it was just over 25%.
So mental math here, 25% of 32 billion, $8 billion in Q1 was done by corporates.
Correct.
It's pretty astonishing.
And when we look back at our information, it was funny because now there's following kind of the MicroStrategy, Tesla, Square of like the buy and hold corporates, right? For diversification, Bitcoin on the balance sheet stuff. And then we started getting lots of inquiries from lots of different people about, hey, how do we do this? I want to do what MicroStrategy did, or I want to do what Tesla did, and walk me through it. And there's companies that like made it through the exploratory phase, certainly like faster and quicker than others. And what we found is there are some companies who are certainly kind of in that MicroStrategy buy and hold mentality. And then there are guys that are trying to like trade their treasury. We have guys that are corporates that have a completely separate business that have their treasury department that are trying to like trade around different price points and entries and exits and have actively managed like Bitcoin portfolio positions. I mentioned that I never would have guessed that corporates would be a big thing in 2020 in Bitcoin, right? I figured corporate balance sheets were going to be on the later stage of like the last guys to buy Bitcoin. Actively trading corporate treasuries was like even further off. It's further off the scale. But we've seen, a number of corporate clients come in and say, hey, I'm going to build a position and I'm going to trade around my core position. And they're doing like derivative stuff with us too. So it's not just kind of in the spot market. They're trading like options and trying to hedge their exposure certain ways and kind of getting creative, playing with volatility from time to time. And so we've found all different kinds of flavors of like corporate clients, especially abroad. There's like US guys, and then there's kind of the Latin America crowd and the kind of Southeast Asia crowd, and that like try to, kind of play Bitcoin differently on their balance sheets.
So just to make sure I understand and the audience understands, you have large corporates like, maybe a Fortune 500 or like a big software company, and they're literally not just buying Bitcoin for their balance sheets or stable coins, whatever it is for their balance sheets, but they're trading in and out of this stuff on their corporate balance sheet.
Correct.
Nice. That's crazy. that's how far we've come.
It's unbelievable. And it's like I said, I never would have thought that I'd be having this conversation with you. Yeah. In April 2021, but here we are.
Yeah. All right, Michael, we could go for probably 2 more hours. So, and I know we're coming up on time here, so I'm going to start to wrap it up. A few questions for you to wrap it up, and then you can ask one question for me. What's the most controversial decision you think you've had to make at Genesis?
Oh gosh. I'm in this unique kind of position within Genesis, so that I can pick the brains of a Barry Silbert or a Michael Sonnenschein, or kind of the brains within DCG, and really be like, and get their best advice, frankly, for how we should kind of approach something. Our decision to buy the custody business, I think, was definitely high on the list of decisions that were certainly, that I had questions about. Mostly because, introducing, we had been non-custodial to date. We never held assets for third parties before. And I think in a world in which, like cyber hacks and this, that, and the other is so, common nowadays, to introduce a potential attack vector or, by purchasing a custody platform, cold storage infrastructure, and start custodying assets for third parties, was certainly, not necessarily a company betting decision, but at the same time, when things go wrong, they can go really, really wrong. And so that was certainly a calculated risk that we've taken, which so far has paid off, nicely for Genesis. But, back then I think it was like, oh, what if we're hacked and we're out hundreds of millions of dollars? was a real thing as part of our calculation.
Yeah. How does a decision like that get made at Genesis? Do you go to someone like Barry and you say, hey, I've got a thesis, we should buy a custodian? Or is it more like top down, like Barry says, hey, buy a custodian, start looking, I want you to own this process?
It's funny. I think there's a lot of, this is probably a separate podcast for another time. But like the Barry is really hands off. He's not kind of he runs DCG and he's kind of the, one of the the leading figures, I think, in crypto. But ultimately, there's never been a situation where Barry had said, hey, go out and do this or do that, do this. Like he certainly has ideas about things we should be looking at or business lines we should get into. But he's much more of like a thought partner and a sounding board for me. Than as far as like him, like, giving out orders or commands, or that's just not like Barry's style and personality. As it relates to Volt, I knew that I wanted to go down the prime broker route, that was a corporate strategic decision at the highest level, that I knew I needed to kind of take Genesis in that direction, and that we couldn't call ourselves a prime broker if we couldn't custody assets for third parties. Like, it's like table stakes for being a PB. And so we said, hey, we wanted to build a custody business. And we were actually at the time trying to think about building it ourselves. So we were trying to like build versus buy analysis kind of within Genesis, right around the time when Volt came up for sale. So it just kind of like worked out from a timing perspective that we were trying to figure out, do we build our own custody solution or buy? And then Volt came on the market. And so I just went to Barry and said, hey, this is the move we got to make. And he just gave the blessing and went for it.
Yeah. Is there a big decision that you're thinking through right now that you can share with the audience?
I don't necessarily know if it's a game-changing, big decision as far as Genesis is concerned. I have an office, we have a London entity, we have a Singapore entity. The biggest decisions right now are around, office reopening, right? You and I were chatting about this before we hit record, as to how to think about this, how to do this kind of like the smart, safe way. So that's certainly one. From a new product mix, we talked about Cap Intro, we talked about Fund Admin. Cap Intro is actually a job opening we have at Genesis. So if you went to genesistrading.com's career page, you'll come up on a Cap Intro role. We are actively looking, kind of interviewing for somebody to like spearhead that function for us. And Fund Admin, that'll be later as far as kind of our roadmap is concerned, but that's still 100% on our roadmap. So those are stay tuned, new business lines for Genesis.
All right, I'll wrap it up with one question for you, and then you can ask me one question. For any founders or CEOs kind of listening to this, specifically in the crypto space or outside of the crypto space, what's one CEO hack or thing that you've done that's been really helpful for you as you guys have scaled from 7 people, like you mentioned, to 35 people to 90 people this year?
I think the most important thing I tell people is to, one, it's time consuming, but be a part of the interview process. There's probably not a more important thing you do as a leader of an organization to be interviewing candidates and screening them, as well as to always be recruiting. Every public appearance, every speech, everything you do, I have to kind of think about it through the lens of, this could be a catalyst to attracting, really talented people to the company. And because bad hires are difficult to correct. It causes much bigger problems. And so I think being as hands-on as you possibly could, it's time consuming. It's hard to find. We all have busy calendars. It's difficult to find time to do it, but I recommend that you invest a good portion of your time trying to interview, especially for the key roles. And number 2, you hire talented people, stay out of the way. Being a micromanager has not worked for me. You hire people because they have different skill sets than you do. Once you bring them on board, let them do the job that you hired them to do. They might make mistakes, but I guarantee that if you tried the same thing, you'd make them, you make mistakes as well. So you do the best you can to bring the best people and then let them let them work.
Yeah, I like that. All right, you can ask me one question if you'd like.
So I've got a personal question for you, Jason, and it's related a little bit to a conversation you and I were having before the recording. First of all, I mean, congratulations again on your engagement.
Thank you.
I was really happy to see that, which obviously kind of brings me back to like when I got engaged and whatnot. Now, so here's a question for you. How long did you have the ring?
Oh, man.
From the time you got the ring to when you popped the question, how much time, days went between that point A and point B?
5 months, which is
wow,
way too long.
How did you do that?
I'll tie it back to the baseball conversation. I bought the ring in December, and I just proposed in 2 weeks in early April. So I've been sitting on the thing for about 5 months. I live in a small Manhattan apartment, and my girlfriend, or I guess now fiance, knows much more of the apartment than I do. I guess she'll, and I hid it. I hid the ring in the one place I knew she would never look, which is my first baseman's glove, my baseball glove, in a box. And so I put the ring in a box, put the box in another box, and put the box in my big clunky first baseman's mitt. And sure enough, she never looked there. So I've been sitting on the thing. It's been burning a hole in my back pocket, but we got it done.
My story was same day. I was so afraid to lose it or drop it somewhere or something. I literally picked it up from the jeweler, and then I proposed to my then girlfriend the same evening.
That's a much better move than I pulled. I'll tell you.
I had to feel like, what, I can't have this. I can't be responsible for this. I don't trust myself. I gotta give it away.
Every like 2 or 3 weeks, I knew it was still there, but sometimes I would just go into the baseball glove and pick it up and make sure it was still there and like hold that thing. I was like, oh man, all right.
That would have driven me insane.
Still,
I couldn't have done what you did.
Yeah.
But good for you, and congrats again.
Thanks, Michael. Well, thanks for coming on. You guys are hiring, so anyone who wants to work at Genesis, is it Genesis.com, GenesisCapital.com?
GenesisTrading.com.
GenesisTrading.com.
Is the URL, and there's a careers page, and there's probably a couple dozen open roles up there. So please do apply. We're hiring around the world, frankly. So would love for you to apply.
Amazing. All right. Well, thanks again, Michael.
Jason, thank you so much.
That was Michael Moro of Genesis. Hope you guys enjoyed the episode. Again, if you enjoyed it, head on over to Apple. Give us a 5-star review. If you're listening on YouTube, punch that subscribe button. And if you enjoyed this type of content, head on over to blockworks.co/newsletter and subscribe to our daily newsletter. Our senior editor, Tyler Neville, is putting out some crazy stuff. We just went from 0 to over 20,000 subscribers in just 3 months. So that's blockworks.co/newsletter. Subscribe for more type of content like this.